Global oil prices crashed to $70, but your living cost has not applied the same energy. The Securities and Exchange Commission in Nigeria has instructed all capital market operators to stop pitching Dangote IPO to their clients and the public. Meanwhile, data shows that Africa's ultra rich are growing faster than billionaires in America or China, while everyday citizens are grappling with structural inflation. In this video, you will find out the opportunities in Africa you may be sleeping on. You'll also find out what the SEC is trying to achieve with this new announcement on the firstborn of Africa's IPO. And then the last thing is the answer to the question when the drop in oil prices will impact fuel costs in the way it did when it was going up. Hi, my name is Oler, and I welcome you to the channel that serious Africans come to learn about personal finance, investing, and the economy. If you don't know, I'm a CFA charter holder. I have almost 20 years experience in finance, and basically all that I do on this channel is explain money in simple English, what's happening in the environment, everything that you need to know in simple English. So if you haven't already, please subscribe. So we get into the news. The idea is, what does this news say to you and what does it mean for you? That is what we do every week. So the first news is that the US and Iran signed a memorandum of understanding to de-escalate tensions basically and reopen the Strait of Hormuz that we've all been waiting for. Now, of course, as soon as that happened, as soon as it was announced, oil traders that had been betting on higher prices and keeping long positions, they started dumping in the market. And of course, as expected with normal trader behavior, we would anticipate that or would expect that some of them went to like a short position. Let's just sell, right? And so where are we right now? From the 100 levels, we are now at $70 per barrel, right? But ideally, we should be celebrating and saying that, oh, petrol should go cheaper and then inflation should follow through on that. But there's a catch, right? It's not entirely happening as we would want it to, for two reasons. One, the fact is that the Strait of Hormuz is technically open, and I'll explain what I mean. It's technically open, but it doesn't mean that things are back to normal, for two reasons. One, after they announced the memorandum of association, Iran came back and said, no, we've closed it again. Why? Because Israel attacked Lebanon, right? But then the US is still saying that it is still insisting that it is open. So is it really open? We don't know. Now, the second issue is that during the war, Iran had laid some naval mines, right, on the traditional shipping corridor. In simple English, the standard routes that commercial tankers used to ply, right, is still quite difficult to navigate because you're not really sure. So think of it like this. There's a major expressway reopening after a crisis, only for drivers to discover that there are still landmines on the road. If it's you, will you go? Wahala. So this is essentially the situation with the Strait of Hormuz right now. And the truth is that even though traders are behaving as though the storm is over, it is not entirely over. And then based on how Iran is really using that strait as its bargaining tool over everything, we expect a lot of ups and downs, right? Because in actual fact, one incident, one drone strike, one shipping disruption, or maybe a tanker hitting a stray mine and oil prices can go back up in one single trading session. So this is not a stable market. This is a market that has swung from panic buying to panic selling. And the fact is that the underlying tension has really not been fully resolved. So let's understand that that is what is happening. Now, this is the part. Now let's move from that's like the basic understanding, but then there's now the part that affects you. You would think that, okay, it was at 100, now it's at 70. Fuel price should start coming down, right? I mean, if they use so much energy and speed to take it up, why aren't they applying that energy to bring it down? But let's understand what's happening. That's the ideal thing on paper, but the reality is that for most countries, the fuel market, the gas price market is deregulated, meaning that the government does not set the prices. What that means is that individual or companies, private companies, are ordering the fuel, the refined products. They are placing the order for it to be delivered at a certain time, and then they would sell to the market. So if I've placed an order and I placed the order 2 weeks ago before this arrangement or this agreement was passed, right, and I bought at 100 level pricing, right, The fact is that I'm going to sell off my stock before I buy at 70 level pricing to deliver to you. So it's going to take some time. So the question is, when will the pump price revert to pre-war prices? I would say give it a month or two, right? And that's also assuming that the Strait stays open in that time, right? There's still some stability, which, like I said, with Iran using this as their negotiation card, we're not sure. We can't say. We'll have to wait and see, right? But most importantly, take this as a gentle reminder, right? If and when that breather arrives, right, and prices de-escalate, prices come down, it is not for enjoyment. It's for you to start building your buffer. It's for you to start positioning yourself so that the next surprise does not hit you in the face, right? Because the fact is this, even if they're able to resolve this totally, we can't guarantee which new global event is going to take the center stage when you wake up tomorrow morning. Do you understand? So I would say that if this one caught you by surprise and hit you in the face, right? Then you need to do something different once this subsides, right? And you have that breather. And of course, if you've never really been able to put your finances in order, that's what we do as a company at The Money With. We have different tools that will help you put your finances in order. Check us out. The link is in the description. Yeah. And of course, subscribe and learn on this channel, right? Now, to the next news. If the words Dangote Refinery IPO have appeared or even the private placement has appeared in your WhatsApp group chats or your Instagram feed or a conversation with someone who knows someone in the market, this next story is specifically for you. But before I get into it, I want to know, please tell me in the chats, have you been approached about buying Dangote shares? Have you been offered the private placement? Please drop in the comments. I really would love to see how far this has gone, right? Because this week, the Nigerian Securities and Exchange Commission instructed all capital market operators to do 3 things with respect to the IPO immediately. Number 1, stop all promotional activities. Number 2, remove all related material from their website, social media within 24 hours. And number 3, refund all money collected from retail investors within 24 hours. Now, let's think about it. Refund money. What does that mean? It means that money was being collected for an offer that does not yet have regulatory approval and for shares that have not really been created on the exchange. They're not yet ready to be sold to the public. So what's really happening here? Now, to be clear for those who don't know, the SEC is the regulatory body for all investment and capital raising activities in every country, including Nigeria. So every country has their own SEC. So they are the guys that would approve the public offer to go live, right? But let me explain how an IPO, that's a public offer, is actually supposed to work, because the process is everything here, right? So if you think of an IPO like a relay race, right? Every participant has their own role defined, and the baton must be passed in a certain order. It starts with the issuer, in this context, Dangote Refinery. They prepare their financials, all the information about the business. Then they gather that and hand it over to the investment banker, who structures the offer, prepares the documentation, and guides the company through the regulatory process. Then comes in the regulator, the SEC, who reviews everything before anyone is invited to invest. So the financial statements, corporate governance structures, disclosures, everything. Then and only then, after the regulators have done their work, do the stockbrokers and capital market operators come in, because their job is to distribute the offer and collect applications. But that only happens, I repeat, after the SEC has reviewed and approved filing, not before. Now, according to the SEC, the Dangote Refinery has not yet filed its formal application for the public offer. So they've never reached a stage where the company has submitted anything or there's a prospectus for anyone to review, which means that the IPO is at stage 2 in a 6-stage process. Stage 5 is where public marketing legally begins, right? And stage 5 is where money is collected. Stage 5 is where individuals are now allowed to participate. And we are nowhere near stage 5. That is literally it. Therefore, any capital market operator that is asking people to pre-fund an offer that is yet to be approved by the SEC, they're just floating on your cash. That's what they are doing. They are floating on your cash. They are gambling on the fact that when the IPO finally comes, and usually what happens is that they get paid a percentage fee for the amount they raise. So they are trying to meet their percentage. Do you understand? And then they will be floating your cash till the IPO comes. I hope you understand. So it's like benefiting every step of the way. Then the mischievous ones that are guaranteeing you shares on the offer, that's the one that is just the most mischievous, because they're not the ones allotting. They're just the ones filling all the forms and transferring to one central place, right, for allotment. So they can't even say they would guarantee. And see all these things that are doing, the SEC is saying we are not having it. All of you should just go to bed. This excitement is too much. We have crossed the line. That's what the SEC is saying. And I do understand, right? I understand the confusion, especially from the retail end of things. There was a private placement, yes. And that private placement was made public. And that's not usually what's supposed to happen. Normally, those private placements they happen, and only people in the system would hear about it. And it just goes quietly. This is not the first private placement ever, but this is the noisiest private placement I have ever seen in my almost 20 years. And I guess it also speaks to the level of anticipation for the offer in itself, right? Which is a good thing, but I think the noise has been more than we've ever seen when it comes to private placements. But the fact is that a private placement always goes on and quietly. It does not mean that you as an individual with your daily 2K has missed out on the offer entirely, right? So if you are not sure, let me just tell you, the IPO is still in the works. The SEC is saying stop marketing. He did not say that. They are not saying that the Dangote Refinery team cannot come and make a case or apply. They're not saying any of that. The IPO is still in the works. Remember that PenCom also gave a waiver to pension funds, right, for this same offer. So it is still in the works. You have not missed it. The public offer is still in the works. You have not missed it. That's one. Secondly, you have to be careful when you're getting offered 10K. They're saying that you could come join or invest in the private placement for 10,000 when the minimum official size was 350K. The fact is that if the minimum official size of that offer was $350,000, the book holder, the book runner, the person handling that is not seeing any name that is below that. Understand that? And if you cannot transfer, if they are saying that you cannot switch or sell for 365 days for 1 year, you are buying 10K, who are you buying from? Where is your money going, right? So that's one thing. Second thing also is that for most of these offers, they're saying, okay, minimum investment is 10,000. You are being offered at a premium. Now, the private placement was valued at $39 billion. Yes. We also saw that in the news, Dangote had said that he was considering or he was thinking about a 50 billion offer. And even the professionals were saying, isn't that a bit much, right? Now, somebody comes to you and says they're selling at a premium. And the premium is bringing you to almost the same levels as the 50 billion that Dangote had said. But you now have a lock-up period of 1 year. So what's the catch? Why are you jumping at it? Why are you investing in dollars when there's a naira option? Why? What are we doing? Why? What do you think you are missing? It's going to be listed. They haven't cancelled the public offer. What's this FOMO about? Why are we keeping our brains aside and running? Right? Such that anyone that comes to you to tell you that they can access a private allocation through a WhatsApp group, like, you should be looking at them with eye, especially because of the premiums that I have been seeing in those offers. Because I did see them, and they're like, why would I pay a premium to lock myself up for a year when the public offer is coming? Why? However, let me just put this here. If you are genuinely interested in eventually owning Dangote Refinery shares, and I did say that I'm going to do like a cover, just break it down, just analyze everything from different sides, right? There's absolutely nothing wrong with planning for it. In fact, that is what we advocate in this channel. Don't wait until the point of the listing and you now start reading. Then you now start making a decision, now start figuring out, oh, I don't have cash, let me pull cash from here. Right? We agree that this is probably one of the most significant listings in African capital market history. Right? We agree. But prepare intelligently. Keep your investment capital in your own accounts. Park it in some liquid income generating instrument. Maybe treasury bills. No, treasury bills might be too short at this point because the timeline is September. But money market funds, high yield savings, right? So that it is working while you are waiting. Monitor official communication from the SEC. See when it is ready. You would even see Dangote come out and say it, right? He has been quiet. Have you noticed? All this noise, he has been quiet. Right? And finally, when it actually comes out, there'll be a prospectus that you can read. Now, the good thing is that AI can help you screen through and throw it into Claude or any of them and say, okay, what do you think? Analyze this, right? To get an informed view that is not biased, right? Now, use that analysis, not the WhatsApp forward, not the viral tweet, not the voice note from the cousin's friend who knows someone in the market. Catch yourself. But read the prospectus. Now, here's the thing, right? Evaluating an IPO, knowing what to do, knowing what to look out for, knowing how to assess evaluation, how to decide what percentage of your portfolio to commit. It's not something, I realize a lot of people don't even know what to do in that spaces, right? So like we have our Money with Light that is launching to stay abreast of issues like this, decision making system, investment frameworks that you can work with, right? The link to find out more and to join the waitlist is in the description, and we are launching very soon. Yeah, so check that out. Now, the final thing is that we've talked about the volatile global market. We've talked about protecting yourself from potential local scam risk. Now, I want to zoom out and show you the bigger picture that both stories are pointing towards, right? Because this last story is not just news, actually. It's a question, and your answer will tell everything about where you stand financially right now. And the news is this, that Africa's ultra rich are growing their wealth faster than their counterparts in the United States, China, and Europe. And at the same time, Africa holds less than 1% of global wealth. Two truths can exist at the same time that actually appear to be a contradiction. It actually can, right? Now, when you hear about growing billionaire wealth, the fact is that most people switch off like, miss me here, that's very far. But please don't. Because what if the lesson from this headline has nothing to do with billionaires? What if it actually has something more to do with where the economy is growing and how you should position yourself? The fact is that mature countries, the economies like the US, Europe, China, they face a real challenge. It's harder to grow from 100 than it is to grow from 10, right? Now, Africa is actually starting at a smaller base. We have fewer billionaires, fewer listed companies, less accumulated institutional wealth. But it's because of that growth rates can be very explosive, right? Now, if you study how Africa's wealthiest individuals built their fortune, the pattern remains the same. They are not building the next social media platform. They are getting rich by solving basic problems. Cement, telecoms, banking, energy, logistics, food. In developed countries, these are matured industries, boring sectors, low growth. But in Africa, there are still growth stories in those sectors, because millions of people are joining the formal economy every year, demanding better infrastructure, healthcare, housing, connectivity, internet, all those things, right? Africa has massive unfinished business, and unfinished business creates wealth. Now, if you have ever watched The Men Who Built America, I'm always happy about it. America went through this phase, right? And it's documented, where oil boom, oil made people billionaires overnight, where, different little things, power, took people to wealth, and that's how economies grow, right? But it's important to know that the fortunes being built on the continent right now are signals. They're telling you where demand is growing. They're telling you where capital is flowing. And they're telling you where opportunity is concentrating. And the mistake most people make is that they assume that the wealth is being only created by founders. But if you're an employee, if you're an investor, if you're a supplier, if you're a landowner, you can participate in it. That's the mindset I want to talk about today. So the people who build wealth are often not the ones who are creating the opportunity. They're the ones that are positioning themselves around it. It's as simple as that. And it's something that I would want us to think about as we see these headlines and we ask ourselves in our environment that what can I do in my space? How do I plug into these gaps? Because every gap represents a story, and these are not temporary trends. They are shifts that we are making as a continent, and they apply to almost every country as long as they do not have war. So one of the things that I also want you to understand is that here on this channel, we are looking at the things that are not so obvious. We are not downplaying the challenges that we have in Africa, but we are saying that these challenges provide solutions, that these challenges provide opportunity for wealth, if you think about it from the flip side. So don't just throw the things away. The question you should be asking yourself today is, what can I do? Which solution can I plug into, right, for future wealth? I trust this was useful. Don't forget that you can't outsource your health and your finance. You always have to engage. See you in the next video.